Hello everybody and welcome to the midweek market update from Smack the Markets for the 11th of March. So the coronavirus is continuing to spread around the globe. Market volatility has continued to increase and we've seen significant moves in many markets around the globe. Policymakers are now starting to try to put in sort of fiscal changes to try and stem the impact of the slowdown that the coronavirus is causing. We've already seen the US decrease interest rates by 50 basis points. Today we saw the UK decrease interest rates by 50 basis points, and the ECB is now under pressure to do something as well, whether it be with stimulus or to reduce those interest rates even lower. So let's take a look at a few markets here that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. So first of all, if we take a look at Kiwi yen, on Monday we were looking for the market to continue to rise here and to get up to sort of close the gap and potentially sort of get up to the level where it is at the moment, around this sort of 66.50 area. We can see that the market has actually got there, as indeed, like a lot of markets at the moment, it's not particularly easy to trade those. It's not necessarily going there in one direction, and there has been a sort of fair amount of volatility to get there. And that's no different to any market at the moment in these sorts of conditions. So if we take a look at this on the 60-minute chart, this is where the market was when we discussed the opportunity on Monday, and we can see that the trend has continued, been albeit fairly volatile, has sort of continued to the long side to get to that price point. So at this price point at the moment, we're only looking at intraday opportunities to the long side because the Kiwi is still strong against the yen today. We're certainly not looking at any new swing plays on this market at the moment. Now, if we come and take a look at the Dow on Monday, let's take a look at this on the 60-minute, sorry, the weekly chart. So compared to Monday, the market is only a little bit under where it was on Monday. So up here around sort of 24,500. Obviously, since Monday, the market has crashed down to the lower structure level we have here on the weekly chart and bounced all the way back off it. And it's been very volatile in between as well. So overall general direction for this, I do expect that the market is going to weaken off. I do expect these lows here to be retested again in the coming weeks, possibly in the coming days. And beyond here, well, there doesn't look to be an awful lot of technical structure in the way to support price at all, not for a long way, possibly not down to that 18,000 sort of price point. So if we come back to lower time frames, probably sort of take a look at this on the 4-hour time frame, you can see the extent of sort of volatility that we've been having here. The market's trying to sort of pick up on any kind of good news and rallying 1,000 points, and then the reality sets in and it drops 1,000 points. So it's been up and down like a yo-yo. If you're new to trading, trading these sort of market conditions are extremely challenging. You need extremely wide stops on these sort of markets, almost swing stops and swing setups in order to trade a 1-minute chart. That's the sort of size that we've been seeing lately. A lot of commentators suggesting that you can make an awful lot of money trading these markets at the moment, but you really do need to know what you're doing. So be very, very careful with some of these highly volatile markets. If we come and take a look at the likes of gold, now on Monday we were talking here again about this 166 level. The market had come back into 166 after the big rally and the big move up here to the $17 level, and we're expecting the market to find a bit of support here. It did. It managed to sort of get the move up to 1680. Since then, we've had now the move underneath 166. So what is this telling us? Well, the unsurprising moves here in gold and the sort of attachment here to this sort of level tells us that the level is a key decision point for this market. So we certainly can establish that the 166 is a key decision point area, which means that if we get a break above this area, we could certainly start to look at longs. If we get significant moves to the short side, well, we're going to start to look at shorts. We've got this next sort of trading window underneath 166 down to around 163.5 through here. Underneath that, we've got that sort of 158 level, which again has been a very reliable level again in the past. Technically speaking, with the world's going into recession and there is a real risk-off sentiment, market money coming out of equity markets, we might expect gold to increase, but we're not actually seeing that coming through into the price action at the moment. If we take a look at oil, now we discussed oil on Monday after the huge crash that we had in oil prices. If we perhaps sort of take a look at this on the 4-hour time frame. If you remember, what we were looking for here on oil was a move up to that sort of $35 level. We weren't really necessarily looking for a complete gap close, especially considering what's sort of going on in the price war between Russia and Saudi Arabia at the moment. So we have actually got that $35 level. In fact, the market moved up to $35.61 or just above that area, and now it's sort of weakened off. So from a trading perspective, there's too much sort of interference with price controls at this moment in time, and supply oversupply being generated. So it's hard to see that we're going to see some higher prices in the near term, especially from a technical perspective, from a technical trader's perspective. So we're now leaving this one alone until things sort of settle down and we get some sort of clearer indication on the fundamentals. Longer term, though, of course, it would be nice to be able to see that gap close and get a move up there towards that sort of 42 level. And also bear in mind that from a longer term perspective, oil producers don't make money if the production price is less than $50 a barrel. So this is unlikely to continue for long, and it's only the people with the deepest pockets that are going to be able to sustain the oil production at these sorts of levels. So plenty of very volatile market conditions out there. It's very challenging to identify longer term positions that are going to run for sort of several days. Most of the time you need to be rather nimble and be prepared to sort of change your sort of decision on a market direction almost every day, sometimes within a day. So be careful with the markets at the moment. We will be back on Monday and we'll see how the markets have calmed down. Well, hopefully calmed down then. And we'll see what sort of opportunities we have then. Hope it helps, and look forward to speaking to you then. Bye for now.